Good morning, everybody. Thank you all for coming. So we will be discussing today Savings and Investment Union, waiting for Godot. Savings and Investments Union, what's in it for retail investors? Thank you very much again for joining us today to discuss the SIU. And is it the Godot that retail investors have been waiting for so long? Currently, around 10 trillion euros of EU retail savings remain parked in bank deposits. If citizens had greater trust in the EU markets, and the Commission's barometer have shown consistently that they don't, and had easier and simpler tools, like the Swedish do, had cost-efficient products and be auto-enrolled in well-performing, cost-efficient pensions, managed by scaled-up pension funds, how much of this capital would be directed towards productive investments in the real economy here in the EU? Unlocking the savings is not just nice to have. It is really a strategic opportunity that could boost EU competitiveness and resilience and help us achieve strategic priorities so that we are able to live in a free and democratic, strong and secure, competitive and innovative Europe. Household savings are the primary domestic source of funds for financing capital investments, which are essential for long-term economic growth. Yet trillions of euros remain trapped in low-yielding deposits and underperforming financial products that will not help EU citizens reach pensions adequacy. If you are interested in details, please have a look at our annual report, Will You Afford to Retire? The Real Return of Long-Term and Pension Savings. So the question is, why aren't EU citizens investing? Are they really being irrational, or is the system failing them? Let us consider some of the influential voices that what they have said about it. Mario Draghi. Despite the higher savings, EU households have considerably lower wealth than the US counterparts, largely because of the lower returns that they receive from financial markets on their asset holdings. Christian Weyer. Household financial savings amount to 35 billion euros, fueled by one of the world's highest savings rate, 13.3%. However, these savings are poorly allocated. Enrico Letta. Financial integration within the single market will remain elusive unless it is clear that such integration serves not merely the financial sector. So let me repeat. Considerably lower wealth, lower returns, poor allocation, and a financial system that is serving just itself. Europe's financial system has been failing citizens far too long, and we now are often discussing EU competitiveness, complaining that EU investors, if they invest, then they invest too much overseas, but we should also discuss the competitiveness of the EU financial industry. High fees, poor returns, pseudo-scientific, confusing disclosures and excessive complexity, this is hardly attractive. This is discouraging investments, and we are witnessing a trend where billions of euros in European capital are flowing to the US each year. Why? In search of better opportunities, in hope of getting better returns and achieving pension adequacy someday and being able to retire. So, can we change it? Not all heroes wear capes, but the stamina it takes for an individual investor nowadays to navigate this complex landscape, and particularly when trying to invest directly and cross-border, it is nothing short of heroic. Yet too often it is the process that wears them out. And research and surveys of individual investors done by Better Finance show that many of them, after wasting lots of time, sometimes counted in years, and hundreds of euros, trying to, for example, reclaim withholding tax, and sorting complex procedures really wears them out. For example, 70% of investors do not even start the withholding tax reclaim process, as they consider it not worthwhile because it's too complicated, cumbersome, too lengthy. And out of the remaining 30%, only half succeed. After some close to traumatic experiences, many simply give up and vow never to invest cross-border again. So this is a significant loss of potential, and not just for the individual investor, but also for the companies and for the economy as a whole. And so hopefully the faster directive will change that. What is also alarming is the phenomenon of debanking. So we have seen that organizations that aim to help retail investors to manage their investments face sudden closures of their accounts, often just within 30 days' notice. And of course, some might argue that banks have the right to decide whom they serve based on commercial viability, and that they are guided by entrepreneurial freedom. And that is, of course, true. But how does this align with the principle of responsible banking, sustainability, financial inclusion, and our broader political goal of encouraging citizens to invest for the future? So is the Savings and Investment Union the Godot that European investors have been waiting for? Will it finally make a difference? Will investing in EU capital markets be easier, more attractive, more accessible, or will we, in a few years, still find ourselves paraphrasing Estragon when asked about the capital markets, complaining, nothing happens, nobody comes, nobody invests, it's awful. I sincerely hope that SIU will improve the situation, and that as Better Finance, I really wanted to thank the European Commission and the European Parliament. We had a lot of fruitful meetings since December last year. We have discussed many of the proposals that, in our opinion, should improve the situation. And both the draft report of the European Parliament published last week and also the SIU communication have many of the proposals that we have discussed in the recent months. And we are very fortunate today to have two distinguished panels of experts who will share their insights on how we could improve the situation and, crucially, identify the initiatives that really could make a difference and be a game changer for retail investments, of accessing better investment opportunities and receiving good value for money. So will it be the blueprint for the ISK? Will it be a simplified PEPP? Will it be auto-enrolment or revised shareholders' rights directive, or maybe the 28th regime that we started to discuss yesterday at the high-level forum, Justice for Growth? But before we begin with the panel discussions, I would like to take a moment to thank the Commissioner Albuquerque for being and accepting our invitation and being today with us and presenting her vision for the Savings and Investment Union. We are eager to hear your views. What can we do better and how we can use the proposals in the communication. But ultimately, as we all know, it really depends on member states. I would say the ball is in their court. If they really want their citizens to invest in capital markets, they should use the opportunities that the communication and some of the proposal of the European Commission gives them. So let's discuss today how to change it. I invite all of you to be very active, ask questions, and I will give the floor right now to the Commissioner. Thank you.